Hey, it's Joe. Got another one. This is from Kwame Williams. Kwame asks, hi Joe, I've got a quick question. I've never owned a business. My question is, when I get rid of a home, how do I pay the taxes on that money? Do I need an account, a bank account, or an accountant, or what? When you buy a property, and if you do a lease option, let's say we do a for rent deal, and you make $5,000 as a lease option fee, that's your profit in the deal. All you have to do is, if you don't have a business set up, if you don't have an LLC set up, is create a Schedule C. And if you have somebody who's preparing your taxes for you, they can do this for you. If not, you can get one of the like TurboTax or one of those types of programs, and it'll ask you if you've got a business of your own, and you just say yes, and how much money did you make, and you put in the amount of money you made. And if you made $5,000, you show that you made $5,000 worth of income. Now you can reduce on a business like that. You can reduce your income by all the expenses that you've got. So any expenses that relate to your business can reduce your profit, and then you only have to pay taxes on the amount that you made. But you do have to pay taxes on profit. You know, that's the situation here. You want to, as you build your business, find the best way to protect your business and to keep your profits down, your taxable profits down. And you can do that by owning property. You can get depreciation on property. It'll reduce your taxes. You can make sure that the certain expenses you have can be applied towards your business. Just keep in mind, like if you went and got the mentor program, in most cases you can you can deduct the cost of the mentor program from your profits in your deals, so that you won't have to pay taxes on any profit up to the cost of what you spent on the mentor program, or on the auto marketer, or on your websites, or on your car to go and talk to sellers, any of those things. So you'll want to set up what's called a Schedule C, and if you just type in Schedule C expenses into Google, you'll find out a lot about how Schedule Cs work. Or if you just, again, get TurboTax and follow the prompts, it'll take you through it. Or easier yet, pay somebody $350 an accountant to do your taxes for you, H&R Block. As you get more advanced, you're going to want to get a good CPA to do this for you. The thing that you do not do is not declare your income. If you don't declare your income, they can put you in jail for that. IRS will come after you, they'll try to put you in jail for not declaring income. If you take too many deductions, that's a better problem to have, because all they'll do is they'll charge you the tax and they'll charge you a little penalty on top of it if they think that one of your deductions is not allowable. So yes, be aggressive on your deductions. Do not ever lie about your income. Always put that on your tax return, and then always figure those costs based on that. And as you go through this process, learn how to pay your taxes, learn how to put money aside so that you're paying quarterly taxes. And it took me a long time to figure out how to do that, but you can do it, and you have a good CPA, they'll help you, and you don't really, it's not a big worry until you start making a lot of money. But I'll tell you, it's really painful if you made $100,000 and you owed $20,000 in taxes and you didn't pay them at the end of the year. April 15th comes by and you go give that stuff to your CPA and they do the taxes and say, hey, you got to pay your taxes on April 15th, 2 weeks from now. And it's $20,000 and you don't have that money. It's a little bit stressful. So don't put yourself in that situation. And my guess is most of you have put if you've made that kind of money and you've come to that situation, you have put yourself under that situation before. Hopefully you don't do it the second time. And I certainly did it, and I hope you guys will pay attention and not do it so you don't run into that situation. You can always get extensions on your taxes. You can't get extensions on what's supposed to be paid, so they're going to start charging you penalties against that money, and eventually you'll have to pay it. But if you're making $100,000, you're going to be able to pay those taxes. I think I had an effective tax rate last year, 14%, because of the houses that I own, the other expenses that I had. I mean, it's really nice when you start building a business. You can have a lot of assets. There's a lot of ways to protect the income that you make without having to pay taxes, where somebody who's making $50,000 a year may be paying 25% of their income in taxes. All right. Well, I hope that answers the question. Good luck.